Hello, everyone, and welcome back. We are delighted to welcome the president of Technical Securities Analysts Association, Roman Bogomazov. In this session, Roman will present practical trading tools originally developed by Richard Wyckoff over a century ago. Roman, thank you so much for joining us today.
Thank you. Can you hear me now? Yeah, everything's okay?
Everything looks great. I can see
Mm-hmm.
you and hear you just fine. The floor is yours.
All right, sounds great. Well, thank you so much for having me, and welcome to this session on Wyckoff methodology. Um, some quick words about myself. I teach Wyckoff at Golden Gate University in San Francisco. I also teach Wyckoff method outside of Golden Gate. I use it for my own trading and specifically for consulting and trading for hedge funds and institutional traders. There is a big interest in institutional community for this specific methodology, and specifically for trend analysis and big campaigns. So those big institutions, they use the method to identify long-term trends, like from a year to 3-5 years. So that's kind of like my quick background. We have only 30 minutes today, but I thought that really quickly I will go through the filtering mechanisms that Wyckoff method presents for a selection process of a stock. And we'll go through comparative and relative analysis. We'll go through positioning of the stock in the trading range. We'll also go through the confirmation of the supply and demand, and also we'll quickly look at the market directional bias. So those are the main 4 filters that Wyckoff method uses to select specific stocks and to identify the timing of that selection. Because this is an abbreviated session, for those of you who would be interested to hear more on the same subject and kind of like to expand on this case study, we're going to look at the Home Depot as our case study. There's going to be 2 upcoming free webinars on the 19th and the 26th. It's 3:30 Pacific time, so you can definitely contact me to sign up for those webinars. If you'd like to receive any more information on the classes, just email me, or you have the address here to go to and check out the classes. The presentation slides are going to be available, so again, just email me and I will gladly send you those slides. All right, so this presentation is for educational purposes only, and I'm not giving any advice here. I'm just showing how we analyze the market or the stock using the Wyckoff method. All right, so who was Wyckoff? Definitely there is some kind of mistake about his personality, because I think that Wyckoff is not popularized enough in the technical analysis community, but he played a big role at the beginning of last century as one of the first technicians who has developed quite a lot of tools. A lot of modern technicians, when I talk to them, they actually all refer to Wyckoff original work, and how a lot of the indicators that they create are based on those ideas that Wyckoff developed. Wyckoff was a contemporary to a lot of great technical analysts of the time, like Gann, Elliott, Edwards, and McGee. He also was a contemporary to great campaign operators like Jesse Livermore or James Keene or J.P. Morgan. He had an access to Jesse Livermore and James Keene, and what he's done is he codified a lot of the principles that those great campaign traders used in their investing and trading. And as a result, he has created a course for the public, which he later sold through the Stock Market Institute. Stock Market Institute, for those of you who might know, still in existence, and you can get the information from then on Wyckoff method as well. So he definitely contributed to the field a lot in the last century. The methodology is very vast. I think that Wyckoff was somewhat greedy when he was creating the methodology, and he wanted really to give the keys to the public and to the individual investors, and for them to be able to make all of the investment decisions based on just one methodology, to define the market direction, to define the selection of the stocks that you want to participate in, to understand where to enter the stock, to understand how to actually proceed with the trade management, and so on and so forth. So methodology is quite broad, and it goes into different aspects of technical analysis. This is a hypothetical price cycle that I've drawn here, and the methodology discusses and concentrates mostly on the areas of consolidation. So an area of accumulation right here and an area of the distribution. And the reason why is because this is where the trends start. So Wyckoff would have a hypothesis that the price is being moved by a composite man. He was referring to big institutional interests, big institutional players, as a composite man. And he would say that during the accumulation trading ranges or consolidations, the composite man would be inclined to accumulate the stock, and once the big position is established, and with the perspective and the future perception of the improvement of the fundamental factors or the market conditions, the price will be marked up out of this area, and it will start trending. And then once the trend is over and the conditions have changed, or the perception is going to change in the future, the composite operator, or the composite man, will start unloading the position, and therefore distribute the stocks at the higher price levels. So our goal as Wyckoffians and as traders is just to be able to identify these areas of accumulation or distribution, and we want to understand what they are. Is this an accumulation or a distribution? We want also to understand when exactly the price is going out of this accumulation. So we want to find some kind of timing mechanism to get on the trend early on, and then to be able just to stay with the whole trend until we hit the distribution area right here. So to do that, Wyckoff would use the selection filters. The first filter is always about the market. So we want to understand what the market is doing, what direction the market is going right now. And we want to understand it from the different time frames, long-term, intermediate, and short-term. Then after that, we would go to different stock selection filters. One of them is going to be the structural filter. So the structural filter is basically looks into the consolidation, whether it's accumulation or the distribution, and we would do the phase analysis or Wyckoff point analysis, which basically tells us where we are in the trading range. So we would say that, let's say if we're in phase C, we are testing the supply at the support levels, and the price is ready to leave the trading range, or at least to do the markup through the trading range. We would also look at the comparative or relative strength filter, which will help us to identify the stocks that potentially will outperform or underperform in the next trend up, or in the next trend to the downside. We also would look for the confirmation of the supply and demand as a filter to confirm that we are on the springboard. The springboard is the position of the stock where the stock has absorbed the supply, it's making the higher highs, higher lows, and it's ready to leave the trading range and go into the major trend. So this main four filters, and this is kind of like a very simplified approach of looking at how Wyckoff would go through the selection mechanism. All right, so let's look at this case study that we have. This is a chart of Home Depot, and this is a monthly chart. So for those of you who are intraday traders or swing traders, this is also relevant to your time frame as well, because the structure or the consolidation, the trading range, always going to have the same principles behind of how it's being constructed, or how specific points are going to be tested, or what should happen after the price moves out of the trading range, and so on and so forth. So you can apply the same principles in any of the time frames. So for our case study, we will be looking at this latest trading range. This is kind of like a very small trading range right here in Home Depot. This trading range was in 2013, 2014. And again, we're going to look at the market directional bias first, then we're going to look at the relative comparative strength, we're going to look at the structure of the trading range, and we're going to look at the supply and demand. If all those four filters are going to check out for us, then Home Depot definitely is going to be one of those stocks that we would consider at this point, to establish the position in. All right, so let's look first at the market directional bias. So this is a very common question, from clients and students that they get as to, well, how do I define a market directional bias? In other words, what is the current trend? Are we trending up? Are we trending down? Are we going sideways? So definitely there are quite a few tools that you can use, and I use actually several tools, not just one, but I'm going to give you a very practical, very simple, very visual tool that you can use. And please remember that the tops and the bottoms, like for instance in 2008, 2009, they don't happen overnight. It takes time for those trading structures to develop. So you have plenty of time to make to come up with the definition for the market. So that easy tool that I want to give you is, I want you to look at both the supply or the volume and the price structure, what's happening with the highs and the lows. And this is probably one of the simplistic tools. So as I see here, there is a break to the downside and supply is increasing, or volume is increasing. There is no follow-up after that. There is some kind of failure of the rally, and then after this failure there is another break to the downside, and it also has an increase of the supply. So we are in the environment where we are making lower lows, lower highs, and supply is increasing on the way down. So this is the definition of the bear trend. This is a very conventional technical analysis definition of the downtrend. To change this, we need a follow through on the rally, and then we need a contraction of the supply. So we're just looking for that type of the change of character. We see that on the next attempt to go up, price still fails. On the breakdown, we see the increase of the supply again. Then on the next breakdown, we see that the price goes down, but supply contracts. So there is some kind of change already, but we still price-wise is not doing well. And then only after breaking this high, we have a very much confirmed major trend change. And this is where Wyckoff would concentrate his attention on the selection of the stocks. He would also go into the definition of the trading range itself, and some of the positions will be opened early on after this low, and the that would be considered as a spring, and as the price goes through the trading range in a sign of strength. But in the very simple mechanical terms, you can define a change of character like this. So what about the current market? And what is happening with the current market? Well, we had a significant increase of the supplies in 2010, 2011. There was no significant increase of the supply, and I'll show you on the next chart, in 2013, 14, or 15. Price-wise, we're still making the higher highs and the higher lows, so nothing really has changed since 2009. And this is the current picture of the Dow Industrial. And what do we see here? The questions that we would have to ask ourselves is what's the long-term, intermediate, and short-term trend? So as I'm looking at this picture, and again, it's a very simplistic visual tool, I know that we are most likely in a secular bull market with the higher highs and higher lows. We are in the intermediate uptrend, and short-term, we are consolidating. There is no any structural damage of the significant higher lows. So what are the last significant higher lows? Well, this areas right here, October low, and then December, January lows right here. There is no really significant supply or increase of the supply. After 2011, 2010, we actually have contraction of both supply and demand. Now, another common question that I usually answer is, well, how come the price actually advance so much, without the demand increasing? Well, it's just a function of the supply. If supply is low, then the price can definitely travel up. So now that we've defined that the market is up, and October low is going to be of our interest, for the case study, we're going to go into the comparative relative analysis. So this is the picture of how Wyckoff would actually look 100 years ago at the comparative strength analysis. He would put one chart over another. He would put the stock, and then let's say a market proxy or an industry group, and he would analyze the significant highs and significant lows and the slope between those two. So for instance, right here, I could see that from this low to this low, comparatively, the slope might be in favor of the stock of the Home Depot, and I could see that there is some kind of strength right here. Now, of course, we can use more modern tools, to do the same analysis. And this is the daily on Home Depot, and this is the trading range that we're going to look at. And we see that during this trading range, the relative strength, and the relative strength, this is not the relative strength indicator, this is actually a relative strength ratio, is in the downtrend. So relative strength by itself, as the price, also can trend. And it's extremely important to understand this concept and to actually think of relative strength as the tool that you can use in your trend analysis. So with the trends, we always look for the change of character. So for instance, a break of the trend, or the relative strength line spending more time above the moving average, higher highs, higher lows. This is an indication of improvement in the relative strength, and this is what we want to see from the stock that we want to select. So Home Depot definitely presented us here with a great selection based on the relative strength and on the comparative strength. Now, when you do this type of the analysis, and when I do this type of the analysis, I always look at the improvement in the ranking of the relative strength for not just the stock, but also for the industry group and for the peers in that industry group. And I could see here from the heat map that our ranking is improving. From this point to this high, we went from the ranking of 77 to 7. So that's a great improvement. I'm looking at the industry group, and it's doing the same thing. There is improvement in the industry group. So that just confirms that the peers are following the suit, and that there is some kind of thematical buying that's going on by big interest, by big institutions. All right, once we've done that and we see that the relative strength and the comparative strength is there for us, we want to look at the structural analysis. Now, Wyckoff has developed a whole method into how to look at the consolidation. Of course, with this session, we can't really go into the details, but basically the idea was, as he looked at the consolidation, he wanted to understand where the stop in action happens from the previous trend, where the building of a cause happens, in what part of the consolidation, where the final test happens, testing, let's say, in the accumulation the previous lows, and testing that supply at the support level, and where the initial markup during the within the trading range, and then the markup out of the trading range happens. If we can identify those phases and those events in consolidation, we can establish a position in what Wyckoff called buy zone. So all of this right here is a buy zone. So we want to buy as the price is being marked up through the trading range and then slightly out. So let's look at our case study, Home Depot. Right here, this is the weekly, the same trading range, but just weekly. We had the stop in action with the climactic action right here, phase A. The intention of phase A is always to stop the current trend and then to go into the consolidation or just to reverse the trend. We are building the cores in phase B. The final test happens in phase C as the last point of support, and don't worry about those Wyckoff semantics. If you want to study those more, it's definitely a lot of fun, to identify those phases and those Wyckoff events, and the semantics are going to be easy for you. We are looking for that sign of strength, the first markup out of slightly out of the trading range, and the backing up action to the previous resistance that acts now as a support. So everything is here for us in this trading range by October of 2014 structurally. So that's a big check for us. So relative strength is good, market is good, we are at the correct structural position. Let's look at the supply and demand as the last confirmation. So this is the slide usually that I give to my students as a reminder of what supply signatures we can have in the accumulation. I'm just going to skip this slide and just show the same schematics here under this trading range that we're looking at. And generally, we look at the structure and we want to see what supply is doing, during this structure. And we see that supply is gradually and consistently decreasing from phase A to phase C, and this is what we want to see. So we see the absorption of the supply through this whole structure, and then once we see higher highs and higher lows, this is definitely the place where we're going to want to become very, very active in our not just selection but considering opening the position. All right, and putting all of these things together, now, we went through the market structure. We defined the market bias. At the October low, we had long-term trend up, intermediate trend up. Short-term, it was a reaction, which is great because during the reactions, this is where we want to be active. This is where we want to make our selection. This is where we want to find the stocks that are going to be stronger during that reaction than the market or than the peers. Then we went into the comparative relative strength analysis. We defined that strength. We found the confirmation of the change of character on the relative strength. We confirmed that strength by what the industry peers are doing as well. Then we went to the structural analysis and we said, okay, well, here is our phases, and structurally we are at the great point. We are before a major advance in the of prices. And after that, we just confirmed that with the supply and demand, there was definitely an absorption of the supply with the higher highs and higher lows in phase D. And this is where we want to be. So all of those filters we've checked, and that's basically a very simplified view of how using the Wyckoff method, we would make our selection. Now, definitely, there are so many tools and techniques, principles and rules that we really have to use for each of the filters here. And this is primarily the studies that we have, you know, when we go through the Wyckoff method. But in a very simplistic terms, this is the selection process that I just wanted to present to you today. And Mark, I think that's it. You know, I think I'm on time, right? So if we have any questions, you know, I'll be happy to entertain.
Roman, thank you so much for joining us. And if anyone does have any questions, feel free to type them in right now, and I will read them to Roman because we do have a couple minutes left. Do you have any information about your web? Okay. What would be the cell signal?
All right. So as with the buy signal, we also would like to see some kind of top information. So that would be a distribution formation. I don't have the schematics or the slides on this formation, but let's just take this example right here. And this is how I usually would even like talk to my students or my clients. So what do we see here? From this lows right here from phase C, we have an established upswing. So the biggest reaction right here is probably this October reaction right here. So I would be looking for this type of the reaction for me to consider some kind of short-term add into the position. If this reaction will exceed the previous reaction, this is going to be a big sign right here. This is a change of character. And also on the relative strength, I would want to see some kind of reaction that is going to be larger than, let's say, this one or this one. So any type of change of character on any of the filters that we went through would be the key sign for exit. For the supply, for instance, we would look at all of the supply signatures that we had on the way up, and we want to see not just the price break, but the confirmation of the supply, so increase of the supply, something that would be larger than this or this right here.
Would it follow the 4 analyses?
I'm sorry, say again?
Would it follow the 4 analyses?
The which analysis?
The Wyckoff analyses, the 4 of them.
Follow? You mean what I just said, the change of character? Yeah, definitely. You know, I actually spend a lot of time with students just exercising that just single principle. So change of character is extremely important because once you see that there is some kind of change of character, you know that there is a change of environment. So from a trending environment, you can go into non-trending environment, or you can go to the counter-trending environment. So kind of like the same concept here. Where is the exit point? Well, you want to find where is this change of character is going to come, and you know that you can find it in the price action, you can find it in the supply-demand signature, you can find it on the in the relative strength signature as well. I hope I'm answering this question. I didn't fully understand the question there.
Well, I have 2 questions. Would you please repeat your email contact information again, and do you have a personal website?
Sure. My email is wyckoffsassociates@gmail.com. So again, if you'd like to receive the slides of this presentation or any information, email me. I'll gladly send the slides to you. Also, this website right here, wyckoffanalytics.com, we just launched it, so it's still in kind of like a beta testing, but there is definitely information on all of the classes. This is the website right here. So all of the classes that we have in March and April. I put them in here so you can browse and see if there are any offerings that you would like to participate in.
Thank you so much, Roman. I'm afraid we are out of time now.
All right,
I just
Mark,
want to thank
thank
you
you.
again for joining us, and thanks to everyone for attending today.